Welcome to the Deep Dive. We're here to cut through the noise and get you truly well-informed, fast. In the pharmaceutical world, the pace of innovation is it's relentless. It demands this constant balancing act, right? Leveraging today's successes, but also boldly transforming for tomorrow. It's a huge strategic challenge.
It really is.
So today, we're taking a deep dive into the recent Q2 2025 sales and earnings from Merck, a real titan in the industry.
Absolutely.
We'll be pulling insights directly from their official earnings call and the news release that came with it. Should give us a pretty clear picture of how they're doing and, maybe more importantly, where they're heading strategically.
And our mission here, well, it's to move beyond just rattling off numbers or, repeating corporate speak.
Right.
We want to extract the truly important nuggets for you. We'll explore their financials, but also the big pipeline advancements, the strategic moves.
Yeah.
The stuff that's really going to shape their future. And what's critical, I think, is understanding not just what happened, but why it matters for a company this size, especially now, with some pretty significant market shifts happening.
Exactly. So let's jump right in. The financial snapshot, second quarter 2025.
Right.
Merck's total worldwide sales came in at $15.8 billion. Now, that's actually a 2% decrease from Q2 last year. Same if you take out foreign exchange effects.
Right. Slight dip there.
And looking at earnings per share, GAAP EPS was $1.76. The non-GAAP number was $2.13.
And it's probably worth noting that non-GAAP figure, it included a 7-cent per share charge that was related to a license agreement with Verona Pharma.
Good point. So let's break down what's driving things, the growth engines.
Yeah. Well, oncology continues to be just a powerhouse for them. KEYTRUDA sales, impressive. $8 billion.
Wow.
That's up 9% growth. And it's not just holding steady. It's really Merck expanding its reach, Metastatic indications, sure, but also really pushing into earlier stage cancers, especially those affecting women primarily. It's like a pipeline within a single drug, almost. And beyond KEYTRUDA, Welireg sales jumped quite a bit.
Yeah.
29% up to $162 million. Mostly from its use in renal cell carcinoma. Animal health also put up strong numbers, up 11% to $1.6 billion.
Solid.
Yeah, benefiting from higher demand really across all species. Livestock actually saw 15% growth. Plus, they got sales from that new Elanco Aqua portfolio they acquired.
Right, the acquisition effect.
And 2 new products are really off to what they called an outstanding start. Winrevair, $336 million in Q2 sales.
That's significant for a new launch.
It is. And Capvaxive brought in $129 million as well. So real momentum from the newer portfolio additions.
Okay, so plenty of positive drivers. But there were definitely some, let's call them significant headwinds that caught my eye in the report. The big one was GARDASIL and GARDASIL 9. A really considerable 55% decline in sales, dropped down to $1.1 billion.
Oof, yeah, that's a steep drop.
And this isn't just, a minor revenue hiccup. It really highlights how vulnerable they can be to single market issues.
Absolutely China, right?
Primarily China, yeah. Much lower demand there. They actually said they don't expect any shipments through at least the end of 2025.
Wow.
Because of elevated inventory and just soft demand.
Okay. So that's a major factor.
And even outside China, sales were down 4%, partly due to the expiration of reimbursement for a catch-up cohort in Japan, basically a one-off vaccination surge that's over.
I like that. Makes sense.
And also just timing of public sector purchases elsewhere. The other challenge was Januvia and Janumet.
The diabetes drugs. Generic competition hitting hard there.
Exactly. Generic competition, lower demand in China and the U.S. Although they did say that was partially offset by higher net pricing in the U.S. A bit of a mixed bag there.
So, okay, you've got these strong growth engines like KEYTRUDA, animal health, new launches. But then these pretty big headwinds, especially GARDASIL.
Right.
How does this all shake out for their outlook? How do these numbers set the stage for those ambitious future plans they keep talking about?
That's the key question.
Well, despite those challenges, particularly GARDASIL, Merck actually narrowed its full-year guidance. Revenue now expected between $64.3 and $65.3 billion.
Okay.
Which still represents, 1% to 2% growth if you strip out the currency effects. And their non-GAAP EPS forecast is now $8.87 to $8.97.
So they're still projecting growth for the year, despite the Q2 dip in the GARDASIL issue.
Yeah, it signals confidence, I think, that these other growth drivers and their strategic moves are expected to compensate, to pick up the slack.
That's a crucial point, leading right into those strategic moves. And this is where it gets, I think, really interesting. They announced a major acquisition, Verona Pharma. for about $10 billion.
Big number.
Huge. And the key asset here is O2UR. It's a novel first-in-class treatment for COPD, chronic obstructive pulmonary disease. Got FDA approval just back in June 2024.
And what makes O2UR stand out?
It's the first new inhaled mechanism for COPD in over 20 years.
Wow, okay. That's potentially game-changing for that disease area.
Exactly. Could fundamentally change how COPD is managed.
And this acquisition, it doesn't feel like just a one-off deal, right? It seems tied into something bigger.
It absolutely is.
Yeah, they're launching this multi-year optimization initiative. The goal is to generate $3.0 billion in annual cost savings by the end of 2027.
$3 billion a year.
Yeah. But what's really fascinating, I think, is what they plan to do with those savings.
Reinvesting it, right?
Fully reinvested. Every dollar back into new product launches and that burgeoning pipeline they have across multiple therapeutic areas.
So it's not just about cutting costs for the sake of it.
Not at all. It's about reallocating resources, streamlining operations, reducing their global real estate footprint, sure, but doing it to free up cash to pour into the highest potential growth areas. It's a classic future-proofing move.
And it's not just reallocating funds on paper either. They're making tangible investments in their future infrastructure.
Like the manufacturing sites.
Exactly. Like the new $1.0 billion biologics center in Wilmington, Delaware. That's set to be the primary U.S. manufacturing site for KEYTRUDA.
Okay, securing that supply chain.
And they're also putting nearly $895 million into expanding their animal health facility in DeSoto, Kansas, boosting capacity for animal vaccines and biologics.
So, building for the next generation of products, ensuring they can actually make them at scale, shows real commitment to long-term growth and, self-sufficiency.
Definitely. Okay, let's dig deeper into that pipeline then. Therapeutic area highlights, starting with oncology, obviously huge for Merck. What's happening beyond just KEYTRUDA?
Well, KEYTRUDA itself is still expanding, which is incredible. It just got its 42nd indication.
42nd.
And its 10th earlier stage approval. This latest one was for resectable, locally advanced head and neck squamous cell carcinoma, HNSCC, based on the KEYNOTE-689 trial.
And why is that significant?
It marks the first perioperative anti-PD-1 regimen approved for this specific disease. So, again, pushing into earlier treatment settings. We're also seeing really promising combination data. Positive results for KEYTRUDA plus chemo in platinum-resistant recurrent ovarian cancer. That was the KEYNOTE B96 study.
And ovarian cancer has been tough for immunotherapies.
Exactly. This is noteworthy because it's the first immune checkpoint inhibitor-based regimen to actually show a statistically significant overall survival benefit in ovarian cancer. That's a big deal.
Okay, so KEYTRUDA keeps delivering. But what about the broader oncology strategy, beyond that one drug?
Their ambition is clearly much broader. They're aiming to develop leading assets across immuno-oncology, yes, but also precision medicine and tissue targeting.
Positioning for combinations, I assume?
Precisely. Ensuring they're optimally positioned for future combination therapies. A prime example is their collaboration with Daiichi Sankyo.
Right, on ifinatamab deruxtecan.
Yeah. They've initiated 3 phase 3 trials for that drug already in esophageal, prostate, and small cell lung cancers. It shows a really comprehensive approach to maintaining leadership in oncology long term.
So this strategy brings us back to that crucial question. How do they navigate the eventual loss of exclusivity for KEYTRUDA, the so-called patent cliff?
Well, Merck CEO Rob Davis, he consistently frames it more as a hill, not a cliff.
Okay.
He cites over $50 billion of potential opportunity from new therapeutic areas. That's the big number.
$50 billion.
With $25 billion of that coming from oncology alone, beyond KEYTRUDA. And they're backing that up with plans for over 60 phase 3 studies in the next 5 years.
So aggressive diversification is the plan.
It has to be. And there's also a wrinkle with the IRA, the Inflation Reduction Act's price negotiation. There's this legislative change, sometimes called the One Big Beautiful Bill.
Right, I've heard about that.
It could potentially push KEYTRUDA's IRA price negotiation impact out to 2029.
How so?
Because it initially launched with an orphan indication, the earliest it could be selected for negotiation under this potential change is 2027, with the price taking effect in 2029.
So that buys them a bit more time on their biggest revenue driver.
A couple more years, potentially. But their core strategy remains firmly focused on diversifying beyond it anyway. They can't rely on that legislative possibility alone.
Makes sense. Okay, shifting gears to cardiopulmonary. What a rapid ascent we're seeing there.
Yeah, Winrevair, quite the start.
Absolutely. Achieved $1 billion in cumulative sales in just 15 months since launch. That's for pulmonary arterial hypertension, PAH.
Incredible ramp up.
It's not just a big number, right? It really demonstrates that Merck's commercial engine is firing on all cylinders. It shows they can turn science into revenue fast, which is crucial for that post-KEYTRUDA future we just discussed.
In the clinical validations there, too.
Definitely. The early stoppage of the phase 3 H-Hyperion trial because of overwhelming efficacy in newly diagnosed PAH patients, that speaks volumes.
Right. And the FDA priority review.
Yeah, for a label update based on the Zenith trial, the PDUFA date, the decision date, is October 25th, and Japan has approved it too.
So strong clinical data, strong commercial uptake. But what's next for Winrevair? Are they looking beyond standard PAH?
They are, and this is where it gets really exciting, I think. They're exploring new patient populations.
Okay.
Like the phase 2 Cadence study. That's looking at pulmonary hypertension due to left heart disease.
Ah, a different underlying cause.
Exactly. And that study focuses on pulmonary vascular resistance, PVR, as a key signal. That's a critical measure of lung artery health in heart conditions. So potentially opening up entirely new uses for the drug.
Very interesting. Expanding the pie. And what about other cardiopulmonary assets? There was news on an oral PCSK9 inhibitor.
Yes, enlicitide. Their investigational once-daily oral PCSK9 inhibitor for hyperlipidemia, high cholesterol.
Oral PCSK9, that would be a first, right? Currently, they're injectables.
Exactly, it would be the first. And they've announced positive top-line results from the first 2 phase 3 trials, the Coral Reef trials, showed statistically significant and clinically meaningful reductions in LDL cholesterol.
Okay, so if that gets approved, how does an oral option really change things? For managing high cholesterol, I mean.
Yeah.
Which has always relied on those injectables, or statins, of course. And what about combinations?
Huge potential impact, you'd think. Patient convenience alone is a major factor. Opens up possibilities for combining it with other oral meds, too. Definitely one to watch.
For sure. Okay, let's touch on infectious diseases and vaccines, another key area for Merck.
Right. They're broadening their protection portfolio significantly. Got FDA approval and an ACP recommendation for Enflonsia.
That's the RSV antibody.
Yeah, their monoclonal antibody for preventing RSV in infants. And the key differentiator here is it's the first and only option with the same dose regardless of the infant's weight.
Ah, simplifies things for clinicians.
Exactly. Simpler administration. And it's a crucial offering coming just ahead of the next RSV season.
Good timing. What about other vaccines? Dengue.
Yes, on the vaccine front, they've initiated the phase 3 Mobilize-1 trial for V181. That's their investigational quadrivalent dengue vaccine.
And dengue is a massive global health challenge.
Huge. As they pointed out, about half the world's population is now at risk, so developing an effective vaccine is vital.
Absolutely. Any highlights in the HIV pipeline? They've always been strong there.
Still very active and promising. There's MK8527. This has the potential to be the first once-monthly pill for HIV prevention. Pre-P.
Once-a-month pill for pre-PP. That would be a game changer for adherence.
Totally. And they say it has a rapid onset of protection within an hour of taking it. 2 phase 3 studies are underway, one with the Gates Foundation.
Impressive. What about treatment?
For treatment, they're developing Vislatrovir plus Ulonivirin. That's an investigational once-weekly regimen.
Weekly treatment. Another step forward.
And also Doravirin plus Islatravir. That's a fixed-dose, once-daily oral 2-drug regimen for HIV-1. The FDA action date for that is set for April 28, 2026. So lots happening in HIV.
Definitely a very active pipeline there. And just quickly circling back to animal health.
Right, almost forgot. It just continues to be a really consistent performer for Merck.
Steady Eddie.
Pretty much. Expanding its portfolio with recent approvals for Bravecto Quantum, that's an injectable flea and tick treatment for dogs, and Numelvi, which is a JAK inhibitor for allergic dermatitis in dogs.
So continued innovation, even in that established business, it remains a strong, quiet pillar for them.
Absolutely. So wrapping things up, we set out to deep dive into Merck's latest earnings, and I think what we've really seen is a company in a period of rapid transformation. They're skillfully balancing that robust current performance, driven by powerhouses like KEYTRUDA and these exciting new launches like Winrevair, with really aggressive future-proofing through those big strategic acquisitions like Verona and these significant reinvestment initiatives funded by cost savings.
Yeah, and if you connect this to the bigger picture, Merck's strategy is really a clear example of how these major pharmaceutical companies have to adapt to a changing landscape.
It's adapt or decline, right?
Pretty much. They are proactively redirecting resources, investing heavily in a diverse pipeline to secure that long-term growth, even as their biggest blockbusters face eventual patent expiry. And that commitment to innovation across so many different areas, oncology, cardiometabolic, infectious diseases, animal health, it truly stands out as, well, hopefully, a path to sustained value creation.
So a final thought maybe for you, the listener, to mull over.
Consider that strategic tension, right? How do companies like Merck maximize the value they get from current blockbusters, like KEYTRUDA, while at the same time making these incredibly bold, multi-billion-dollar bets on future growth drivers?
Yeah, it's a high-wire act.
It is. What does this deep dive into Merck's strategy really reveal about the broader future? Not just for pharma innovation, but maybe more importantly for patient access to these new medicines worldwide. Something to think about.